wanted to catch up with you because we had a great chat last week about investment properties, and it kind of got me really excited about investment properties, just hearing your excitement. So tell me, how did you kind of get started into investment real estate?
Well, I've been a consultant for 12 years, and while I love it and I love selling my time for money, actually, that's a lie. I don't love selling my time for money at all. I've been trying to break out of that, to be honest. Like
Yeah.
in any way I can, like I went into some other streams of income to start to just transition out of there, and then my father-in-law, he's got like 10 investment properties, but for some reason, he likes the strategy of not making any cash flow. And when we were looking for our first home, my wife and I, we were like, let's grab this home. And then my agent's like, hey, why don't you guys do an investment property next? And we're like, all right, that sounds good. Well, wait, what if we do this one as an investment property? Then it'll make it easier to buy the next one.
Yeah.
Uh, and it ended up turning out really, really well. We found a place that was just fantastic. We were able to turn it into a triplex, and it started cash flowing 2,500 right after we finished it. So it was just absolutely crazy. And when I saw the power that this had, like I'd seen some information where people were like, "Oh, we're making like $100-200 a door," and I thought that's not going to make a damn difference in my life at all.
Yeah.
But when I saw what I can do here in Toronto, that's when I got excited, and when I saw I actually could pull it off, and I saw the difference it was making my life right away. I was like, "Let's go! I'm all in."
You were
So
all
that was 9 months ago.
No, you had that nugget in your head already when you're talking about, like, your father-in-law. So obviously you've had some background thinking about investments. So you just took the first plunge on the first time out
Yep.
to tackle it. And now what kind of lead up, like what kind of research, bless you, what kind of research or lead up time did you have to get into that? Like what did you do to get ready for investing?
I just studied a ton. It was like I'm very much a numbers guy, a spreadsheet guy, and I'm a big nerd. So leading up to that, it was just all hands on deck on analysis. So it was learning the area, learning the financing side,
Yeah.
understanding what I need to look for in a property to make it worth it in terms of how hard is it to renovate, to turn it into what I need to do. There's just a lot of analysis, and it was finding a lot of reliable data sources was, I think, the toughest part.
Yeah.
And relying on other people to give me data, even that is a little bit tough
Yeah.
because people don't want to just hand out data like whenever. So it was really important for me to become a market expert so that I don't have to rely on other people to have my finger on the pulse of what's going on.
Yeah.
And then on the other side is understanding the financing. So I did a ton of research and reading and speaking to mortgage brokers around what are the ways to optimize financing in order to actually make the returns and also to make our strategy future proof so that we can continue to grow as opposed to get stuck in one or two or three properties. I know it sounds weird as an investor to say that I'm rather risk averse, but I'm rather risk averse. So if I don't have, like in my calculations, everything's buffered, everything is pessimistically estimated, and if the numbers don't make sense or are even close at that, then I don't even go forward.
I think any investor will tell you that it's that conservative side, that you got to take risk, but calculated risks.
Yeah.
And I even reading something from Warren Buffett. It's not about how much you make on investments. It's how much you prevent yourself from losing on a set investment, right? And so that kind of mentality keeps you going in the long run, not these short-term spurts of making money. Because if you're not sheltered for a down market or a turn or anything that's changing, you can really be impacted.
Yeah, absolutely. Actually, recently I went into a new deal with a joint venture partner, and we really connected and we really aligned because we share this view that we say that as long as the downside is protected, the upside will pretty much take care of itself if the investment strategy is correct, and that's very much in line with what you were just saying.
Now, I know you're an information guy. You absorb it, you go, and you're ambitious, so you go and take it on and see where you can find it. But most investors that I talk to are usually a typical homeowner that says, hey, I have some now equity built up, I want to look into investing, or I want to start in this game. Or any young investor, what kind of advice would you give them for anyone just kind of getting started and they don't know where to look, they don't know where to get this information that you've now acquired?
Okay, so there's like almost two parts to this answer, and the answer is going to depend on what does the person want to do. Do they want to be an active investor or do they want to be a passive investor?
Yeah.
If you want to be an active investor, then you got to cram all this knowledge, or at least some portion of it, into your head before you can go forward. So there's the various elements of an investment. So there's the analysis, finding the deal, and then there's the financing, and then there's the actual execution of the project. So there's a lot that goes into being an active investor. So the analysis, all that, you've got to actually find the deal itself. So for there, you've got to do that same market research, choose a market, become an expert on it, or choose a strategy, become an expert on that, talk to people that have done it, do some research and find people that have done it and talk to them and see what they did to get to where they need to go. Talk to realtors, pull comps, use House Sigma, just anything that you can do to make informed number-based decisions.
A quick point, like to what you're saying is asking the questions, like, what kind of investment, how, who, what, where, getting into asking those questions and really drill down what you're looking for.
Yeah, yeah. So that's on the finding the deal. Then there's the financing and all that kind of stuff. So you need to work with a mortgage broker that's going to get you familiar with the process, not just feed you answers, so that when you're even doing the analysis, you're able to get some sort of rough idea. Are you going to be able to pull this off? What sort of financing do you need?
I like that comment. I wasn't thinking about going into mortgages, but really, knowing the difference between, let's say, a standard pre-approval mortgage for buying your first home versus an investment mortgage, they're very different because there's different factors that go into them.
Absolutely, yeah. So if you're doing this as a primary residence, then you don't have to put in 20%, for example. And people are really scared off by the CMHC insurance premiums on their mortgages. But when I look at it, it's actually laughable, the difference that it makes on an everyday basis, or even on an annual basis, versus what it allows you to do. Versus exactly as you pointed out, if it's an investment property, then you're definitely looking at 20% down. That changes the math. That changes the criteria of what you're looking for. So really important piece on that. And then the third piece is actually pulling off the project. So sure, there's buying the property, but generally, if you're buying a project that you're looking to be an investment property, it's not already at full value. It's not already in the final state of what it's going to be in order for it to achieve your purposes. So if you're doing a flip, you need to work with a team that you understand both their numbers and their expectations. So when you're looking at these properties, you know that this team can pull it off, or this is approximately how much it'll take for this team to pull it off. If you're doing a BRRRR, or if you're doing just a flat out buy and hold, what's it going to take? How much time and how much money is it going to take to transform that property from what it is now to what it's going to be in the future that you want it to be? And so getting that power team around you, those are the three elements that I would say that there are active investing. And you won't get them all at once, but you need to address each one at least a little bit, and then you'll build up your strength.
Yeah, so basically finding the investment,
yep,
financing the investment, and
yep,
execution.
Yes.
Yeah, that's great.
Yeah.
That's a great little overview of what it takes.
Yeah, and that's on the active side.
Yeah.
So if you're on
the active side, right?
Yeah. So when I do this now, I like doing this stuff, but some people, they don't want to do this stuff. And so that's where they become a passive investor. So you're talking about, what if you have some equity in your home and you just want to invest it? So then you may not want to do all that stuff. You may not have the time. You have a full-time job, a family, whatever it is. So then you can work with someone like myself who wants to do all that stuff, who has the time and already has all that knowledge. I've already put in all that time to attain that. And then when you're a passive investor, then you got to be really clear on what your goals are. What kind of investment strategy do you want? Do you want to be really, really passive, like not look at it, not think about it? Do you want to be a little bit more hands-on, where you're like, hey, I like to check up on the property, I like to see what's going on in there, or you like to have a say in the tenants? What sort of returns are you looking for? Are you someone who's looking for someone of a quick return, or are you looking for stability and long-term appreciation return? Getting clear on what your goals are and how a passive investment is going to further those goals, that's going to make a conversation with someone like myself really productive.
I mean, that makes a lot of sense, and you're relying on the experts who are in it and do it for the love of the game, for the passion, right? You can have who has the systems and structures in place. So all you got to do is, again, choose your level of involvement, and again, go through the questions of
Yeah.
what goals. And then once you got that figured out, connect with somebody who's in alignment, and someone basically you can trust.
If I was on the other side, I'd be looking for people that have a track record for this kind of stuff. That'd be where I would go, being on the other side. And it's not just a track record of doing investments; it's a track record of doing investments that work with what your goals are.
Yeah.
So if somebody's got a track record of doing amazing flips, that's fantastic. I still wouldn't invest with them because that's just not what I do.
That's not your expertise. Yeah.
Exactly. Yeah. So it's really finding that fit both in terms of goals and what the investments are going to do to further those goals, but also like strategy and a personal fit.
That's required depending on the level of investors' involvement. I'm assuming if they're highly involved with you, there's got to be a level of compatibility or different skill sets being brought to the table.
That's right. That's right.
Yeah. Well, that's fantastic.
Yeah.
So tell me a little bit about your ideal property, or maybe a case scenario. What's important to you in an investment and what you're looking for.
Cash flow.
Cash flow.
I pretty much live and die by the cash flow. So in Toronto, or essentially in the Golden Horseshoe, appreciation is you can be pretty confident that you're going to get some appreciation. In Toronto, you can be pretty confident that you'll get the most. So, but at the end of the day, appreciation is speculative, and since I'm risk averse, I don't typically care about the appreciation as much. The only time it really matters to me is if I want to do a more immediate refinance after the project is done. And then that short-term appreciation is more or less forced by whatever work I do. And so I don't really have to speculate on that. But when I look at a property, the numbers are everything. And I look for cash flow. And the reason is there's really three forms of return on a property. So when you buy and hold a property, there's three forms of return. There's the cash flow. How much profit are you generating a month? The second form is the mortgage pay down. So when you're holding a mortgage and you're paying it every month, a portion of that goes to equity. And so that's actually being put right into the house. That's not going to the bank. And so that's a second form of return. And the third is appreciation. So when I look at a property, two of those three are non-speculative. I'm not speculating on the cash flow, and I'm not speculating on the mortgage pay down. I'm only speculating on appreciation.
Yeah.
So as long as the cash flow is there, everything else takes care of itself.
That's one of the biggest challenges with the values of properties in Toronto. The cash flow is the hardest thing to get after debt service. Like it's a challenge.
You have to do some work on it to get it to that. And generally that involves conversion. It requires adding units. And so what I look for are properties that are of a price that I can get in, but also of a layout and of a size that I can get in the appropriate number of units at the appropriate size that will actually support my cash flow goals.
Well, I mean, this is, fantastic insight into finding investment and what it takes and what you're doing. If someone wanted to connect with you and get more information from you or look into possibly, investing with you, what's the best way for them to kind of reach out?
They can reach out to yvlproperties at gmail.com. They can find me on Instagram, YVL Properties. They can find me on Facebook if they want at Yakov Mad Hatter, which was my old DJ name. So they can find me there. So yeah, wherever they want to reach out, I'm happy to chat.
100%. Love it. All right. Yeah. Well, thank you for the insight and thank you for talking. Well, I guess we'll talk soon.
Awesome. Thanks so much, Paul.